Welcome to the Traders Market Intelligence Report, brought to you by WBHQ.com. My name is Robert Roy. This update is for Monday, the 29th of July, 2024. Hope you're having a fantastic day. I hope it has been a great trading week for each and every one of you. As we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or adding in an indicator. All right. So as we jump in here, I want to start off first, as we normally do, with economic reports for next week. So this is only U.S., so this is a very busy week, and there ain't none of them on Monday at all. So if we look, we're looking only at orange and red reports. That's it. Orange is moderate impact, red is a high impact. So we've got, let's see, S&P Composite, HPI. I'm not really too worried about that. It's at 9 a.m. 10 a.m. Market's open. This could affect what's going on. Jolts and consumer confidence. 8:15, we've got non-farm payroll. Now that's ADP, so it's important, but not as important as the government one. Employment costs, that's 8:30, 9:45 is PMI. Okay, moderate report. 10 a.m., pending home sales. Fed funds rate comes out at 2 p.m. 2 p.m. is their statement, and 2:30 is the press conference. You will see light volume on Wednesday because of this report coming out until the report comes out, and then you're going to see potentially whipsaw taking place up and down in the markets. We've got unemployment is big. PMI is coming out at 9:45 for the final. I just don't see it being that big. ISM's manufacturing PMI is at 10 o'clock. That one is of concern. Same report. 8:30 reports all on Friday. They're big. Right, a couple of reports that the Fed definitely likes to take interest in. So make sure you know the report's coming out before you go ahead and jump in that trade. All right, now let's shift gears and jump into the S&P 500. So here we are today. We've got about 4 minutes left till the market closes. If we look very closely, right, we've got a great move on the S&P here. Good pullback. I love the pullback. Today's bounce, magnifique. 54.73 is a key fib level. If you don't have that down, 5473, you can see it right on my screen there. Go ahead and put that line on your chart. That is a critical fib level that we want to make sure we know where it is at all times right now. Realistically, we need to get above that line, above the moving averages to get back to a bullish bias. We are not there yet, but it is very doable, all right? If we fail and break to the downside, then it just is more of a tailspin. Now, when we look back, right, look left. Right? Just do it with me. Left. All right? We want to look left at what's happened before. We've broken through this 55 moving average before. We popped back up above it. We had a quick little hiccup down. Back up again. Now we got a little bit higher highs going. Higher lows. Another higher low. Gap up and a run from there. And that's what I'm looking here. We're going to get a little bit of a toying around with that 55. Maybe even breaking through it and then taking a pop. Possibly. But I am not disappointed at the move. I love seeing the pullback. It gives everybody an opportunity. If you missed out on an entry into some positions, I'm talking about maybe a little bit longer term hold, maybe some stock positions that you're looking at. Maybe you want to add a Tesla or something like that to your portfolio. These types of pullbacks are a big help for everybody. Right? You can't stay at all-time highs forever. We've got great runs here. I mean, what was this pullback in here? 5%, 8%, maybe it's 10% of that move. Big deal. It's nothing in the overall scheme of things, right? So when we look at the downside, what are we looking for? It's got to break the 55, and then we've got 53.74. For the upside, it's got to break through the 54.73, the 54.87, get above the moving averages, and then you're running into 55.56 on the top end for our resistance there. When we look at the VIX, fear, that was not fear. That's not fear. That's not fear. There we go. Come on. There you go. Snap, crackle, pop. We're at 16.5. We were in a moderate rank yesterday on VIX. Today we're back in low. It's at 16.5. We're down $1.91. I mean, it's been a good bounce on the S&P and definitely an overreaction on the VIX, right? I don't really care that much about the VIX as we're sitting down here at 12 and 11 and such. 14, 15, 16, I'm definitely paying more attention because traders are paying more money for their options based on that VIX level. And ladies and gentlemen, there you have it. You have a great rest of your day, great weekend, and I will see all of you at our next update. All right, folks, bye for now.